Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Fabi Lara of the Next Big Rush. So, how you doing today?
I am doing really well, Daryl. Well, everything seems to be up today, so by definition, I am doing very well. Thanks for having me.
Yes, for sure. Yes, it seems like well, for me, it's like, okay, my wealth is like increasing. It kind of feels weird in some ways, but it's like, oh, this is a reality.
Yeah, finally, I was lucky enough, or maybe not lucky enough, because in my mind, it should have played out in a different manner to be part of the mini bull market that we had in 2016.
Hmm.
And it kind of left a taste in my mouth of, okay, this is a short version of what a bull market feels like, but it didn't have any follow on. It just kind of died. It lasted 6 months. And it was kind of a bear trap. Now we're living what is either a proper bull market or the continuation of a bull market. You can argue that started way back in 2002,
Hmm.
back in the day when governments were selling gold, and then really smart people, really smart gold bugs were starting to buy gold because it was sitting at $200. And so we're living this next leg of this really exciting bull market. But now I'm invested, and it's nice to be in the industry, working behind the scenes, and trying to take advantage of what's happening around us. Finally,
Yeah, it seems like in the last few years, I've only been like seriously investing in this sector since 2020, and there were some volatile times through through that 2020 period, especially with some of the uranium equities and such, as well as I mean, gold had ran up to $2,000 and then came back down. I think it touched 1,600, 1,700 at one point. And just to keep operating with that conviction, I think that for me, having experienced the prior bull market, like I had to really hone in on my conviction on the asset and such, and like really like, okay, let me stick it out. Let me stick out these volatile times. Let me focus on the long term. I had to get a lot of consoling from people like Rick Rule and yourself and others to, just to kind of weather those storms. And so yeah, I'm definitely appreciative of folks that have been in this investment sector longer than me. So I do want to jump into gold. Let's start there. So obviously gold has been moving. The big story has been central banks buying gold. I actually recently saw a chart where the tonnage has increased for significantly for many nations, and it's outweighed the decreases in the as far as the sales of gold reserves. And so multiple things have happened since then. I saw that the Morgan Stanley chief investment officer come out and say that 20% should be allocated to gold, as well as I saw from BlackRock, they are bullish on gold, especially in a rate cut in environment. And then you also have Goldman Sachs with a $4,000 gold target, and they were saying, from what I was reading, that they really suggest allocating a percentage to commodities and especially gold. And so it seems like the sentiment is starting to shift. Are we seeing some of the big money come in yet, or are we still waiting for that to transpire?
both. So we're seeing central banks buying and pushing the numbers up in a way that gives us confidence that this is more of a long-term play because, thank goodness, they're not short-term traders. Otherwise, it would send all the wrong ideas to the market and they wouldn't have what they're after, which is security, right, for their own currencies and their economies. But if you think about the history of gold in people's portfolio and what that used to mean, even back in the 90s and 80s and 70s, it was commonplace to recommend a 2% holding. And it was common for, globally for there to be a 2% holding of gold and that be the standard. Nowadays, that's 0.5%. And so even though we have to take a look at, okay, who are the players in the market? And what does it mean when each of them moves? So you have central banks buying, and even if central banks aren't massive purchasers of gold going forward, as long as the next players down, meaning big endowment funds and big hedge funds and funds of funds in general, start to buy the idea of holding just the historical norm, the standard of 2% gold, it means that the demand for gold, the physical format, should quadruple from here, which, when you say that, and we're at an all-time high at, around 3,700, I don't always like to say the exact number because as soon as this video comes out, it's going to be something completely different, especially, we're in a bull market. And so it's very
It'll be at
volatile,
5,000.
super volatile. But as it stands, we're about 3,700 US dollars. And people are saying, 4,000, 5,000, 10,000 and beyond is quite normal. It's hard for us to fathom that the little coin, just over 31 grams can be worth that much. But we also have to remember that if funds just revert to their historical norm, then quadrupling the demand for physical gold is going to be absolutely insane. Then there's the question of, okay, how are they going to do that? Are they going to do it through, paper trading and paper gold, which means you don't really need the underlying gold as much because they can, expand and contract the contracts and how much physical you need versus, the paper amount. And so there is some range of how much increase we would get, but there would definitely be an increase that would be sizable enough for us to go to over, call it 5,000 gold conservatively. I don't really think of that very much. I don't spend too much time trying to focus on, okay, how high can we go? I try to see more of what are the people who are buying gold doing right now, and are we going down the pipeline of the next guys up? Are we at a level where retail guys are buying gold? Are we at a level where, we've had the run in gold producers? Have we had the stage in the bull market where gold developers are really running? And so when you take a look at everything that's supposed to happen in a gold market, gold moves, then the best producers move, the not so great producers move, then the developers move, then the exploration companies move. If you go down that chain, the developers are still so cheap. The ones that have known gold in the ground, compliant resources, but that, aren't that close to actually mining the stuff. They're just expanding their resources. Those companies are pennies on the dollar right now by any sort of measurement. And so when I look at that, I'm like, okay, we still have some time. I don't know how long we have. And I try not to think of time in months and years. I try to think of time in a bull market as moves in price. I think that matters more because the last 3 months of a bull market, of a real bull market, are completely insane. And I think we have a very decent ways to go to the point where if people are coming in right now, I think they should be cautious. I think they should be picky on what stage of development that they go in, but I do believe that there's a lot of room yet to make really good returns.
Yeah, so I'm curious in your thoughts on. So obviously, you mentioned like some of the developers. They have known gold in the ground. They have proven and probable reserves, but they may not necessarily have the capital to get the mining process started or whatnot. And then you got exploration companies. So typically, what we've seen is during a time period where banks aren't necessarily lending as much, and especially if they're trying to reduce risk, you have those royalty and streaming companies step up and provide financing for those projects. So now, as we begin to shift to a lower interest rate environment, as well as the gold price, measured in dollars at all-time highs. I would think that some of the bigger lenders, the bigger money, the banks would see this as like, okay, this is a golden opportunity to put a company in position to actually start producing this asset that is going to print cash.
Yeah, so this is the interesting thing where I kind of go against the grain when it comes to trying to pick companies and deciding whether a company is going to produce or not. So there are two schools of thought in the mining investing world. One is, okay, so you have these developers that should, in theory, go into production, and that's where you make the real money because of the cash flows from what they're producing, the gold, silver, etc. And it's somewhat expected, especially in Australia, it happens more often, where the company is expected to, go through all the different stages and build a mine basically and put the project into production. I am of a different school of thought. My thinking is, okay, things are getting better, and it is going to get easier and easier, I believe, as long as the bull market continues to finance a mine for the price increase and the market cap increase of these companies to attract more financing options. There are companies where you're obviously sitting on $1 billion resource, and not even a resource, let me correct myself. $1 billion resource in situ doesn't mean much. An NPV of $1 billion is what I'm actually looking at. Okay, so it's really a lot more than $1 billion, but they've decided that because of all the discounts, etc., the whole project should be worth, $1 billion. And these companies are trading for less than 100 million. That big disparity, and there are many of them out there. When you see that, there is a lot of room for them to run and for potential financial suitors to come along and help them out in the next step of development. My thinking is, if you are recruiting good enough guys to develop a project and to find the ore body, find the deposit, define it, it's very difficult to then change up all the different pieces of the puzzle to make it so that you have the best mine engineers and the best financiers to actually build a mine. I think that building a mine is a completely different ballgame than finding a mine and defining a mine. So my thinking is, okay, which companies now have not the best shot of ever producing? That doesn't even really come into my questioning. My thinking is, okay, who has the best chance of being more and more attractive as a stock? Because remember, and this is a very powerful and painful lesson. There's a company out there called Largo Resources. Bear with me. This sounds like I'm going off a tangent. I'm not. Largo Resources is a vanadium producer in Brazil. And Largo has gone through the stages of development and actually produced. And their market cap has expanded to fit the stage of development. But because they had to print so many shares and raise so much money, and they encountered so many issues, because obviously like vanadium is very exotic and it's hard to put a mine into production. And so because of that, you look at the market cap and it's grown a lot, but you look at the price, like the share price has not appreciated in the way that it should have been if you zoom out enough and you really take into consideration everything that they've done, with the project. And so my question as a small investor is not, is this going to get built? Is this going to, become a profitable mine? My thinking is the second level from that is, does this look like it has a shot at being built so that somebody else can buy it and they can figure it out if it's possible or not to build that mine. Let's focus on getting a team that knows how to find a mine, and let's get somebody else to do the dirty job of actually building it, because that's a whole another ball game. And I think that that's where a lot of the problems really come to life. And that's where my focus is. And I would invite all small investors like myself to start questioning what your thesis is and bring it back down to, okay, how are you going to make money from this? It's one thing for the company to make money. They're going to make money whether you make money or not. Remember that. I've crossed over to the dark side of companies, and I'm dealing with management teams all the time. They get paid whether we as investors make money or not. They have shares. They have sometimes, they're employed by the company. They have RSUs. They have options. They have a plethora of different ways of being rewarded for the work that they're doing. That's all fine and dandy. We need good people. We need to attract good people, and that's great. But at the same time, I think some investors get lost in the project and how is the project going to get advanced? How is the project going to be financed? And looking at the stock and how you're going to make money from it, I think is where people should focus more on, especially if they're smaller initial investors.
We've just made a discovery, the Thera discovery on the Poplar property. It's really captured the attention of a lot of people, including a number of majors. There's already a big resource base there at Poplar. We're drilling that out as we speak, so expect good, strong news flow from us over the next little while. You want to be invested before we start to drill our Copperview project. That anomaly we have there is outstanding, so I think that's a chance of seeing a major re-rate. You can find more about Vizsla Copper at vizslacopper.com.
Yeah, so I mean, a big focus needs to be on capital management. How are they managing capital? I mean, if they're diluting the shareholders and they're still getting paid as the gold price increases, right? Then that's we get left holding the bag, So yeah, that's definitely important. So I do want to touch on the aspect of. I was talking with some folks, and obviously I'm a big proponent of holding my physical gold, but obviously that's something that I'm not going to sell. It's insurance for my money and my wealth. But as far as like it's growing it, I invest in the equities. And so just thinking about where we're at now, I mean, you have I haven't looked at the recent numbers, but I remember the GDX and some of these mining stocks were up, over 70% on the year and such. And obviously you can go down the chain to the developers and the explorers and such. How much higher could these, miners go and such? And then also, like, do you think like there's still a lot more upside potential as you go further down the chain?
Is there more upside potential as you go down the chain? I would tend to think so, yes. And how much higher can we go? That is a loaded question. Reason being, it really depends on whether you're going for simply a small company versus a real exploration company that actually hits something and finds, a world-class deposit. So right now there's a bit of a resurgence happening, for example, in the Yukon up in Canada. Companies there are looking for gold, and because of snow-lined gold, which is defining, 7 to 10 to upwards of 10 million ounces of gold, and so that kind of whet the appetite for other juniors to now start exploring in that region. And some of them are really catching a bid before they ever start drilling, which good for them. They're raising on the back of that, and they're expanding their drilling programs, which is great. And so my question is more about the individual company of, okay, how much higher can this company go? And most importantly, what sort of expectations have been placed on this precise company? So
Hmm.
there is a company, I'm not going to name any names because they're good people and I don't think they did anything wrong, but people can be upset when they lose money. And they found some gold in Saskatchewan and it was a really good hit, but it was one drill hole, I believe. And there was this massive expectation that they were going to find this amazing deposit. They went back there and drilled a lot. And it's not that they didn't find anything, it's just that the expectation was so high from the first drill result that all of the people that were bidding up the price, and it went up to over $1, they were, disappointed because in speculators' minds, if you hit, say, 20 meters of 2 grams per ton gold, in the next set of results, for some reason, they expect like double that.
Hmm.
And there's always this expectation of, the results improving when there's nothing about, exploration that dictates that that's how it needs to go. And so it's company by company basis. And so that stock, even though, they have a much better idea of what they have, it's down, I think it went down as much as 80%. And it was like this, right? As soon as they put out results. On the other hand, there's a company that shall rename unnamed as well for other reasons because I haven't really finished buying the stock. They have a project in a jurisdiction that's kind of hairy,
Give me the name
but
offline.
I'll tell you. I'll tell you in private. There's a company that has really good rocks, and the geology is really sound. Nobody knows it exists, and if I told you who's invested in it, you would buy it. And if I told you how much it's going for now, you would buy even more. And nobody knows about this company, right? So if this little company, which is sitting at less than $1 million market cap, if people only knew of the level of geological interest there is on that particular flagship project, it could go up 5 times without anything advanced in the project in and of itself. No difference, just people know about it, could go up 5 times. Easy, easy, easy. Now, what if they then find something? Then we're probably talking 10 times on top of the 5 times, which makes it a ridiculous number. So it goes back to what is that company doing right now? How much have they ran up and why have they ran up so much? Is it because, and this takes, some digging. This is why, I've partnered up with a company called orestocks.com, and they basically let you use AI to research junior mining companies. So I go in there and I personally do this and I try to figure out, okay, when was the last time they had a marketing contract on? I'm all for a marketing contract. That's part of my work. When was the last time they had a marketing contract on? What happened to the share price while that was on? And did they have any results to sustain the price? If they didn't, then you know that the expectation that they hit something is big. And if they don't hit something absolutely amazing, then the stock price will fall. So it's very nuanced and you have to dig a little bit deeper into each individual company. Unfortunately, it's not like a blanket way of investing where you can just say, hey, just, buy anything that has gold or silver in the name and you're going to be fine. Unfortunately, it doesn't work like that. And with the use of AI, I mean, I'm not the only person using AI, and there are a lot more people using Grok, using, you name it. A lot of these tools are they don't even have updated information and still people are using them. And I'm all for using technology as much as you possibly can to make sure that you cut through the noise and you get to the information that you want. This is going to be the way to invest moving forward. And it's going to be, very case by case basis more and more, I believe.
Yeah. So is this the type of alpha that subscribers to the next big rush get access to? I mean, 'cause,
No,
yeah,
I don't have a paid subscription. So this is the kind of alpha that my very closest friends get. And no, I
Put
don't
in a
charge
comment
for
if
like,
Bobby should do a paid subscription. Y'all put it in the comments.
yeah, put it in the comments. I mean, if there's enough demand, maybe I'll do it. But this is just, I love looking at the tiny little companies that nobody knows exists. And now with this AI, it's much easier, much faster for me to find stuff and to figure out if it's something worth, speculating in or not. And word of advice, like, okay, I don't give financial advice, but this what I'm going to say right here is financial advice. Make sure that when you're building your portfolio, if you're buying something that you believe has massive leverage and has massive potential of going 10 times and upwards of that, you don't need to go in big. Okay? When something really works out, you never feel like you own enough of it. That's okay.
Yep.
But what I absolutely hate seeing is that, as we're going longer and longer in this current bull market, you're going to be seeing people do absolutely insane things. They're going to sell their homes, they're going to sell their cars, they're going to put money into crazy stocks that have silver in the name and absolutely no silver in the ground. I know because I've done this. I mean, I haven't sold anything of value, but when I only had a few thousand to invest back in the day, I put money into companies that had the right thing in the name without actually checking anything. So I'm guilty of that. And so as you see crazier and crazier things happen, and people probably are gonna like tattoo silver stuff on their bodies and do all these sort of cult-ish things. Don't be tempted to go all in on something that is so very frail and so asymmetric. Basically, if it's asymmetric, then the research should be your vote of confidence, not the amount that goes into it. The amount that goes into it should only be very large if you think it's a safer investment. So that is my financial piece of advice. Put in more where you have control of it. For example, I'm comfortable buying stock in the company where I sit on the board of, because I actually influence the outcome of the company directly. If it weren't for that, I wouldn't, be comfortable holding a six-figure amount, which I do now. And I advise everybody to take that into consideration. Unless you can change the outcome of a company's future or heavily influence it, don't go all in, and don't go too heavy, because if you lose big.
Yeah. Yeah, for sure. Don't go. Got a hunch, bet a bunch.
Yeah, that's Rick's,
So
Rick's favorite line. Got a hunch, bet a
uh,
bunch.
so
Don't bet a bunch.
uh, so just thinking about where we are in the bull market. I mean, obviously, we can't like pick tops and bottoms, but it seems like, I mean, the reality is like we had a huge move really fast, and then when we compare to prior bull markets, especially the early 2000s to about 2011, that was about a 8-year period of a constant run up, and obviously the great financial crisis. You had a dip there, but then it ran up again for another 3 years. So, I mean, thinking of that being almost a decade-long bull run, where do you think we are in where we're currently at? I mean, especially with the recent move that was just very fast, right? It
Yeah,
seems like,
for sure. So I do expect a correction from here, especially in silver. People get very excited for silver, and there is a lot of manipulation happening in the paper silver market. And I'm sure some of your hosts or some of your guests are a lot more versed into, how it actually happens than myself. I don't really go into much of the manipulation part because I think that most of the financial system is manipulated anyway. So my question is, okay, how do I work through that and how do I make money even in the manipulated assets? And so I do expect, the silver shorts to have a little bit of a win here, a little bit of a breather. If the equities correct nicely, I would like to buy more silver stocks because I don't have much if any, silver exposure right now. I have, exposure to gold projects that have some silver, but not pure silver plays. So I'm looking forward to a possible correction in the short term, gold as well. But in the long run, I do believe that we have a long ways to go in this bull market. Like I said, price wise, not so much time wise. I can't really, predict how long we have, but if you take a chart of the gold or the silver price, more the gold price, because silver gets absolutely insane, and you step back and you zoom out, then you can truly get a grasp of how quickly we're running. And I believe that one of the ways that you could try to verify if we're at a top or not, or getting close to a top, is something I did years and years ago, and it worked extremely well. If you go to Google Trends, and there might be a different way of doing this through ChatGPT, because now people are using AI instead of Google. But if you take the equivalent of Google Trends and see the search volume for how to buy silver, that is a question that is only asked by truly newbies in the space. And so that happens when we're very close to a top or at the top, because the people who literally don't know how to buy a silver coin, they're the last ones in and there's nobody after them. Like, who could be more of a retail newbie investor than somebody who's asking how to buy a silver coin, right? Like, there's nothing that is a lower level than that. I should know, because that was me, in 2010. And so when you see that, and you see that peak is considerably higher than the 2011 peak, then you know that you're much, much closer to another peak, because there's no reason under the sun why this silver bull market should not eclipse the last one. And so I would, take a look at that. I would take that as a pointer. I would take retail sentiment as that pointer to decide whether you're selling or you're buying. And I mean, take profits as you go. I'm not a proponent of selling half of my position when I double, because junior mining is so risky that my expectation is never a double. If I want a double, I'll invest in something else. I'll invest in real estate. I'll invest in other vehicles. If I want a junior miner to go up in price, I'm expecting at least a 3-bagger, 5-bagger, or more. And so what I do is I wait for a little bit more of a run, and then I start taking profits. So the idea of going all in and then waiting and then going all out it's very flawed and very, very difficult to nail. So yeah, short answer is I don't know, but I will be watching sentiment, because it becomes really wild. And when people start saying on Twitter that silver will always be, 3 figures, and that it's never crashing, and that it will now be instituted as, money instead of gold or with gold, etc. When people start kind of going a little bit overboard, I would start selling my positions. And the reason why I'm talking about silver and not gold is because usually gold starts a bull market and then silver takes over, and silver is starting now. It's starting to boil. It's starting to stir the pot. The silver bugs are coming out of their rocks, and they're starting to celebrate a little bit. Rightfully so. I think my silver coins from when I bought in 2011 are finally at a profit. So I'm like, yay, silver. It's been 15 years, but finally, thank you very much. My child plays with my silver coins every now and again, and it wasn't a problem. But now I'm noticing, like, gee, each one of these little things is worth over $40. I'm not gonna let her play with it, That's some dangerous stuff there. And yes, watch sentiment, because that is a big tell in the silver space.
So I heard that the inflation adjusted number for silver should be above $200 an ounce when you're factoring back in the all-time high that was made in the I think it was the 80s, 70s, 80s. I mean, if silver hits triple digits, I'm offloading physical and stocks. Like I'm, I'm definitely going to cash
Me
in.
too.
But just thinking about is that something that's in your view? Do you think three figure silver is I mean, anything's possible, but do you think it's realistic number?
I think it's very realistic because the gold silver ratio is a ratio that people look at, and it's a ratio that people like to compare with historical norms. And most historical norms would point to, $100 plus silver as long as gold is sitting at the levels that it's sitting now and going to where we think it's going to go. So I don't think that it's, completely insane to expect silver to hit that. I think going back to the manipulation story, I don't know if it's realistic to expect it to stay there. And that's the big question. Yes, I would be offloading silver when it does cross that magical number. And something that people have to be both cognizant of and realistic about is when we're at a top of a bull market, psychology reigns, which means you're going to have to go almost against your gut. It's going to hurt to sell. And there's going to feel like it's a different paradigm. You're going to literally feel this time it's different. I know because I was on stage, next to Rick Rule, and I was saying, I think this time is different for uranium. And literally, like the next week, it started to go down in price. And so don't be tempted to believe your own story and your own portfolio that this is a new paradigm. If you believe it could be a different paradigm altogether, there's got to be numbers associated with it. Going to uranium, which is something that I love talking about. I'm still invested in uranium, after 11 years. I've taken some profits. I've had good profits and gone in and out of certain areas, but I'm still very much invested. And I think the real reason is because the paradigm has actually shifted. And I can go back and say, okay, demand and supply expectations and numbers look like this today. And going forward, they're going to look something completely different. And this is the real reason why. It's not an imagined, it's not a hypothetical reason. It's like, okay, the nuclear power plants are getting built. They're being approved, planned, and built. And so you can actually try to forecast the numbers changing and always go back to the numbers. If people are buying silver, it's good to go back to, okay, what's the supply and demand situation? Because if there can be lots of supply to come into the market very quickly, then that all comes crashing down. The manipulation part is that the people who hold the lever can say, okay, we need to hold 1 ounce of physical silver for every 500, paper silver, a contract of 500. Let's just call it 500 to 1 just for, simplicity's sake. And then they can turn around one day and say, okay, you can trade 1,000 instead of 500. We've just changed the rules and people can't do anything about it, right? It
Yeah.
is manipulated by design. The whole
Yes.
point of, the places where I don't want to target, certain departments of companies or institutions or anything like that, but we all know who they are. And they have to manipulate it because if they were to just truly sell the metals, they wouldn't make any money. There's no money to be made in just, adding a couple of percentage points to silver and gold. You can make some money as a small business, but as a large corporation, there's just not enough meat on the bones. And so because they can pull that lever, they can create a bull market in silver, but they can also kill a bull market when they change, the numbers. The only weapon against it is to call for delivery. So if you buy enough contracts and you can actually call for delivery and receive the delivery of your silver bars and your gold coins, then that is real demand. That is real demand. But that, I don't know if that's a campaign that's worth really investing in but it's something that it could break. I mean, the silver market could break if enough
Yeah.
people ask for delivery.
Yeah, I got to dive more into the history of the manipulation in the silver market. I mean, I know, like, obviously 1964 is when they started removing silver out of the coins. And then a lot of that, from what I read there, was because people were hoarding silver, and so there was a shortage, and so they started, replacing the metal with other metals, base metals, and such. And then you had the Hunt brothers, where the rules were changed underneath them when they were doing their thing, and so I wouldn't doubt that the rules would get changed again, and that further manipulation could happen. And so I'm definitely, you got me curious on that one. So let's go ahead and pivot to uranium. So obviously uranium went over $100 a pound, cooled off to the 60s, and then now it's sitting at 77. The stocks have rallied significantly. I mean, some of the stocks that that I've been invested in are like up higher than where they were when uranium was at $100 a pound, and so, which was kind of interesting. I was like, okay, these are. I'm like, is this just front running or what? Like, what's going on here? Because I mean, when I'm invested in some of these companies, and they were lower at a higher uranium price per pound, and then now they're higher at a lower uranium price per pound. So were they just mispriced when the uranium was at $100 or what? Or, and I'm sure a lot of it has to do with the Trump administration and some of the executive orders and relieving some of those that red tape, and you're getting a lot of investment from AI companies and all of that. So I just want to get your overall look on uranium.
Love uranium. I have said this for a long time. US-based uranium, I think, is where it's at. Obviously, you have some massive exploration potential in the Athabasca Basin, also the Thelon Basin. There is something very, very interesting going on there because they're trying to find the next Athabasca Basin, but there are only, a handful of players up there. So geologically, it's very similar, but they're trying to make this like the new frontier for high grade uranium. So super interesting. I'd invite people to take a look at the companies working up there as well. But when it comes to US uranium, we kind of know where all the uranium is, from a global idea of the US because it produced so much in the past. So the US was the largest producer of uranium way back in the, I believe, 60s or 70s. And it all came crashing down due to many different reasons, prices, 3 Mile Island, and, the fact that you could produce a lot more uranium cheaper outside of the US, which is true nowadays to this day. US deposits are usually small in size and they aren't very high grade, but they're usually pretty close to the surface. You can use ISR, which is in situ recovery. You're basically pumping solution into the ground and collecting the uranium. So it's cheaper to do that in most instances. There's some players trying to go hard rock and heap leaching as well, which I'm very looking forward to seeing what happens in the uranium space with new technology. But the moment that Trump got back into office, it became a whole different 4-year run for uranium in the US, right? Because he wants to bring it all home and he wants to, beef up the whole cycle in house. So he wants to make sure that we don't really need and I don't know why we say we, I'm not American, but that you guys don't really need to source uranium from outside the country. And that is value in and of itself. Now, it is very true what you said, that the stocks and the prices have not traded in tandem whatsoever. So this is what happened to the stocks. They peaked in November of 2021 and they've come down since then. Then the price then ran up to, 105, 107, whatever the final price was. I believe 2023. It was either
Yeah, great.
2022, 2023. It was like an end of year, beginning of year kind of scenario. And then it's come down quite a bit, and now it's going up again. Now what we're seeing, and I'm talking about very recent activity, we're looking at companies running and the price running. When I say the price, I'm going very practical here, talking about the short-term spot price. So spot market is very small. It's about 15 to 20% of the yearly traded uranium. Most of it is contracts. We don't really hear about the contracts until it's like a month later, and the numbers are really iffy and they're kind of not accurate at all. And they're full of like floors and ceilings. It's hard to really get a good sense of what the prices are really at when they're signed. So what we have is a bunch of retail investors that are looking at the price starting to run, and they're bidding the equities as well. My feeling is that people are becoming more and more pro the idea of investing in junior mining stocks. And because they've had recent runs with the gold stocks, that people are making a little bit of a profit and they don't mind putting into the uranium stocks right now. I welcome this move. I think it's healthy. I think it makes more sense. And historically, this time of year is extremely positive for uranium. So I do expect this for once to be a proper run where the price is running, but also the equities are following it. And I do see more interest in uranium. I can tell because I get more followers on Twitter when uranium is heating up. You can also like take a look at the people who have the most followers in the uranium space, such as John Quakes and others. You can see it very clearly. Sometimes, the number of followers of theirs jumps very quickly. You know that that's a hot week for uranium. It correlates perfectly. The number of followers, it goes back to sentiment. Number of gained followers versus, what's happening to the equities and the price as well. It's very, very interesting how that happens. So yeah, I'm all for, people looking into uranium, and it's kind of a second chance for people, really, because you can grab what I would consider to be some bargains, even in the US. I know it's a hot space, but there are some companies that if they can advance those projects and prove up the historical resources that are in the ground, and advance those projects, get proper PEAs out, PFSs, et cetera, et cetera. I think we're going to be seeing eventually great M&A action in the US for a lot of money. That's what I'm expecting.
Okay. So yeah, so just thinking about when the equities had topped in 2021, I remember, vividly just, engaging with Rick, and Rick's like, hey, I'm selling, like these are getting way ahead of themselves and such. And many of folks in the comments audience were upset, like, oh, I lost a lot of money or whatever. Right. But Rick knew like these equities were getting ahead of themselves. And so now, since then, and where we're at now, it's changed fundamentally, significantly. When now you have, a president issuing executive orders, you have AI, investment coming into the sector. Many of these big companies coming into the sector and investing and such. And so it seems like structurally, and we've always had the supply demand gap. But now, we have the policies and such on the side to support this innovation and getting back to, being leaders in uranium and things of that nature. So it seems like it's that, I'm hesitant to say the equities are getting ahead of themselves now, but there is a component which I do want to get your perspective on. So obviously the nuclear companies, Oklo, Nanonuclear, SMR, many of these nuclear technology companies have just skyrocketed. I mean, I was buying Oklo at $7. I didn't have the courage to hold through all of the volatility, but they were, last I checked, they were at $130. Right. So, just looking at that, and it's like, okay, well, hang on. You all need the uranium to even get this technology off the ground. You need the fuel and the enriched uranium and all of that. And so, I'm like, okay, is there a disconnect there? Is this just retail coming in front running or whatnot? And so I've been kind of curious about that.
Okay, so I am smiling, but I'm also crying on the inside because I never took part in the tech side of the nuclear cycle. So it pains me to see it, but it's also very refreshing because my belief is that what we see in the gold space, where producers first run and have that massive, upswing, and then the smaller companies follow and actually overshoot in potential gains. I think that we're going to see that in uranium just by exactly what you said. I actually received a message from a very good friend of mine today on Twitter, and he said, what's happening to Oklo right now is going to happen to us. It's just going to take a lot to actually hold it while it happens because it's a wild, wild ride and it can be extremely volatile. And people who think that just hitting, $100 per pound and just jumping out of that are probably going to be disappointed. Fair point. Um, and I think that the situation with uranium specifically, separately from silver, separately from gold, it is something so unique with a market so small that any true disruption to supply or the appearance of true supply disruption can make this thing go absolutely haywire. That plus the demand that is coming. And I want to remind everybody, I know that the WNA came out with their, little cute graphs that say, hey, we're going to be good for another 2, 3 years. But, after these 2, 3 years, we're going to need more uranium. Nobody is actually sure of the amount of uranium that we're going to need for SMRs because it's so early days. And because we can't really quantify, we don't know how much there is. We just know that there is going to be a lot because, these smaller reactors, the whole point of them being smaller is that you can have a lot of them and they can be built faster and they take very high concentrations of uranium, I think is the best way to put it. And when you first load up a nuclear power plant of any sort, you need a lot more material than if you're just recharging it, right?
Mm-hmm.
Which means that there is likely a tsunami wave of worldwide demand. I tried to not get too excited, but I can't help it. There's a tsunami of worldwide demand for nuclear fuel, aka uranium, and nobody knows exactly when it's going to kickstart and how high this demand is going to be, how strong this demand is going to be. Therefore, all we know for certain is that all forecasts are wrong and they're wrong to the downside, which makes me very, very happy to hold uranium equities right now because I know how crazy it can get. But also, don't take my word for it. If people aren't really certain that the equities are going to hold because of the quality of the assets, the management teams, and things could get really gnarly because people can dilute too much, I accept that as criticism. People can just choose to buy, Sprott's Uranium Trust and just make a bet on the asset itself. I don't know what it would take for the bear case here for uranium, but I think it's absolutely a no-brainer to go long uranium at these levels, both on the equity side, but on the actual commodity as well, 100%.
Yeah. Yeah, I actually wanted to. That was a perfect segue because I wanted to talk about the Sprott Uranium Trust. Also, there's Yellow Cake on the London Stock Exchange, I believe.
Yeah.
And so, thinking about the physical trust of uranium, obviously the spot and term market are two different things. But just thinking about the spot market, I'm looking at spot, and I watched spot, go up to over 30 something dollars Canadian, come down to around 20, and now last I checked, it was sitting at 25. It could be higher. It doesn't seem like I mean, Sput hasn't reached its recent highs and stuff, and so I'm kind of wondering, like, okay, how high could these physical uranium trusts go? Are these like new products, like historically in the uranium market as well? Like, did we have spot uranium products or companies that were publicly traded back in the last bull market? And so, just want to get your perspective there.
Yeah, as far as I know, there was nothing quite like it. I believe Yellow Cake was gobbled up by one of the bigger players. If I could be crazy about this, but I do believe that it is now part of a bigger vehicle. Could be Spot, could be somebody else. My memory is a little bit murky on that front, but there was no direct way of, especially retail participation, to go into uranium. And an argument could be said that, hey, you can make the argument that maybe the equities last time ran up so much because you couldn't buy a vehicle like Spot. This is fairly recent. It's a handful of years old, and it's somewhat of an innovation by Sprott. I commend them for it. I think it's great, and it's kind of a flywheel effect when it's really bullish, and when they can raise money, they go into the spot market to buy more trust units, or more pounds to print more trust units. And that in and of itself makes it more attractive because the price is going up. And then, there's a whole cycle that gets kickstarted by that premium. And so maybe at the end of the day, it's good for people to, diversify a little bit and go into spot as well as equities because, in the last cycle, the equities were really the game in town when it came to retail investors. And now retail investors have spot and they have crypto options, backed by uranium, and they have the equities. So maybe it's not going to run as high. But I guess my answer to that would be that at the end of the day, from what I have studied of the last bull market, because I didn't participate in it, it was very localized US, and financial players getting into, but like mostly US money going into that tiny little market. Right now, uranium has the eyes of the whole world, and we have real demand today. We have very strong demand in the next 10 years and extremely strong demand in the next 15, 20 years, you name it. So could it go higher than, 140 as it did last time? I think it's absolutely no brainer. Could it go to 200? I am betting on 200. I'm not going to lie. Um, could it go a lot higher? It's not impossible. It's
Hmm.
truly not impossible. I mean, there was some Twitter chatter the other day about a certain producer having real engineering issues and having output issues. Something as small as that could kick us into, $100 territory. Um, and even when that is resolved, nothing can actually fix the underlying issue in the uranium market, which is there is not enough supply and it's almost impossible to bring uranium into production.
Hmm.
Until that can be resolved, we're going to have a situation where uranium can moon for any reason at any time, and you know go absolutely haywire and reach numbers that I don't even dare talk about in public. So because it's so supply constrained, expect anything. really.
Yeah, yeah, that's very delightful to hear. So,
If you're long, yes.
so earlier you mentioned crypto backed uranium. You said something
Yeah.
I was going to catch it. Could
Yeah,
you speak on that?
there's a way now of buying a token that is fully backed by uranium. So you can do that if you hold crypto, if you hold stable coins, you can switch it to uranium backed tokens as well.
Oh, yeah, that's interesting. I
And
didn't know
that for
that.
sure did not exist last time around.
Yeah, yeah, definitely. I know that Tether they linked one of their coins to gold, and so it's supposed to be 1-to-1 with gold, and so that's interesting to hear that with uranium as well.
Yeah.
Yeah, appreciate all of the insight and everything that you provided today. Where can people connect with you, ask you questions, tap into some of the Twitter chats or whatnot? Where can people find you?
Sure. They can just search for the next big rush. There's a free website with a ton of news every single day, but I'm also on Twitter. I'm on LinkedIn. I'm everywhere. Not Instagram. Sorry, I don't really use Instagram, which is weird for a millennial, but I just don't. I can't be bothered. It sucks all of my time, and so I just don't do it at all.
Yeah.
So anywhere but Instagram, you can search for me at the next big rush.
All right, sounds good. Well, you all be sure to check that out and hit the subscribe button. Love to have your support for the channel. Thank you for watching, and thank you, Fabi, for joining us today.
Thank you so much, Darrell.